Debt consolidation of credit cards and or loans, or this other alternative option to lower payments between 40 to 75% plus on average, lowering those payments low enough for you to be able to have enough cash flow, working capital to continue to grow and expand and even get out of a tight pinch if you need to in a much more structured way. Hi, welcome in. This is Michael with Viral Funding Solutions. I'm a business funding expert, business loan broker expert, pre-underwriter / underwriter. And like yourself, I run my own business and businesses. I have one in the digital marketing agency, lead generation space, one in the health affiliate marketing space, others in the affiliate ventures, verticals, other ventures. And this has been my primary focus as a business funding expert for many years. I've been doing this for quite some time. And like yourself, I look at tax returns, I look at all the numbers, and that's where I'm at my best. I'm an introvert. I'm more camera shy. It might not be that way as you see it because I've learned the skill sets as a business owner, as an entrepreneur. I'm very ethical, so you don't have to worry about disloyalty with me or any trust issues, none of that. I'm normally having to worry about that from the other side to see how the other person corresponds and if they are accountable and responsible. And character matters to me a lot. If you've seen me before, I talk about that subject a little bit. I may leave it towards the end of this video. But what I wanted to get into is debt consolidation. Is that the way to go? Whether you have these credit cards, these loans, you're trying to put underneath another new loan to then pay off your existing one or ones, however much you have. Do you have enough cash flow? And I'm going to be getting into this document here you see on the screen. But before I do that, just so you know, I created a video not too long ago. I'll try to link it to you down below in the description where I go in more in depth into debt restructuring, debt consolidation. There's potential reverse debt consolidation or other loan scenarios. Perhaps you need to do equity, liquidity backed, or what are some of the ways to mitigate those risks? Because you're in a situation right now where you don't have enough cash flow of your business. Perhaps you're using up your business credit cards, your personal credit cards. It's too heavy. Your utilization is way beyond 35, 40%, and you wanted to get it low below 35 or 30%. What do you do about that? As well as, should you go after a personal term loan, installment loan, a personal line of credit, a HELOC? Should you do a cash out refinance? Is that suitable enough? You have the right amount of business debt to try to refinance, try to lower your interest rate, try to put this underneath a new service and more. So on the credit side, before I go into this document in a little bit, is just understand that you have to be cautious of what you consolidate and how much you consolidate. Because if you're going to do that with your credit cards and you hire a third-party agency, and I have connections just so you know this, I'm able to help people with myself and or my team be able to settle their debt, be able to consolidate, be able to restructure, lower payments, that threshold. And when you try to consolidate credit cards, that's so much of an iffy subject because if you do it incorrectly, if you do too much of it, and if you just do it in general, it'll end up going backwards where it could show up on your credit report. It could show up as a way that it was settled for less than the original amount. So let's say you have a total of 20,000 in credit cards over 4 to 5 credit cards, whether they're of an equal balance or not, however much you receive from each, how much credit you have underneath each. That's a different story, age of history, all of these other things are in question, but it's also more based upon your current debt and what you owe and what you have probably missed payments on. And this would be a great route if you potentially just are missing payments or you're a couple behind or it's a recurring pattern every month or every other month. You're going to get yourself into a position where you can't do anything else. So you try to consolidate 20,000 in total over 3 to 4 cards, or it could be a couple of cards in total. It could have been a higher number. The higher you go, I think the worse it actually gets when you talk about settling, when you talk about consolidating this, and it becomes an issue at that point, and then it can hurt your credit. And then also you're just covering up more payments with more payments, although it is reduced, it can be reduced 50% or so. But in that case, it can report bad on your credit report and it can stick around as a consolidation for 7 and above years. This is an option that I've helped people with, but I would completely not go down that route. It's just, I would think a level up above the bankruptcies, any kind of bankruptcy in general, chapter 11, chapter 7, anything you can go into, chapter 13 there, what is I meant to go into in the beginning. But you go on to the personal, you go on to the business side, and you think about what you have and what you don't, and what you need to pay, what you can't pay. And if that's absolutely the last resort, that's it. but those can stay up on your credit report way beyond 10 years. I've seen too in certain cases. And when you try to go get a loan, like an SBA, a bank loan, and these other ones, and they're looking for a 4 to 5 year pass record, and you still have that bankruptcy, and whether it's still in the report or not, or whether you got it completely, something was discharged, was it dismissed? So there are those instances that we still need to go through. But when you're consolidating credit cards and you're giving up a higher amount to pay off the 20,000, pay off the balance, or settle for less, then that's something that can have a bad effect when it's then on your credit report. So there's a lot that I can go into with credit cards and also consolidating that, and I can spend a numerous amount of time on, but it's just going to be a lot of the times a band-aid for a majority of people. But what could be an alternative? That's what I want to spend a little bit of time on, and I'm going to show you guys a place that I would recommend to get started with in terms of what's the next approach. So this may look familiar if you've seen this in the past, but here I'm not going to get into all of the details. There are just a few bulletin points, and on the other video I went into this in more detail. But consolidation, we normally think about consolidating a loan and replacing your existing debt and moving into a new loan. And that can have some complications too. If you have multiple different creditor notes, you have different payments you need to get structured differently. You have a mortgage on top of all of this. You have perhaps an EIDL loan payment, and that then you're looking at trying to refinance, consolidate, ideally have everything underneath one loan, and that won't work. They won't do that for that service. And if you're not in a whole lot of heap of trouble and you're not going upwards and you're missing payments and you're going through so much financial hardship with your rent, your bill, everything like this, if you're dealing with all these problems, then it makes it harder to justify worth doing. And I'll get into some of the ways that perhaps you can go around it or go about it. So that's pretty much what a consolidation is removing the current amount by taking on a new amount and paying what you have there. And you're not usually getting rid of it, but you're moving it over to a new location in a place. A lot of the times people think that they're completely getting rid of it by getting a new loan, but you're going to use that to pay the other parts down and off. And so there are just a few things here. And then I just got into refinancing, how refinancing for a better interest rates is normally when you see somebody go for debt refinances. And then consolidation is putting together multiple loans as one. And then there's a debt settlement, is negotiating with the creditors, with a third-party agency to sort out paying less than what you currently owe. On your own, you can sort it out and work with a debt professional team to renegotiate and negotiate on your behalf. That's what I would recommend. Now, the better way to go about it, and what I share with people all of the time, is the number one way I recommend this is doing a debt restructure. This is where you're going to get a debt restructuring and settlement team. So you can look to restructure or settlement, and you don't have to do it all on your own. A lot of people try to do that and they do it incorrectly, and they don't get enough of what they need to get lowered down on their balances or completely removed. And they were unaware that this was going to be showing up as this or that, or they thought, okay, I'd have to go into a bankruptcy because I couldn't make the payments. There are a lot of things that come up when people try to do it on their own. So for a debt restructuring and settlement, is it right for your business? If that's what you're questioning, for a lot of people, it is. If your cash flow right now is restricted, it's because of your current debt and you have to meet all those obligations. There's a lot of debt that people incur in their business, not just through high interest loans, but other ones that they can't make payments on. And they're having to pay other loans and providers that they have to do before they can meet any other demands and needs. Have you taken out any other kind of loans or any kind of other advances? Perhaps if you're getting a merchant cash advance or MCA like debt factoring, and you're trying to pay off other debt trying to do 25 to 30 or 50% of that money goes towards paying off that existing debt, and the rest of it you're using as working capital needs for growing and expanding your business, your revenue, getting better ROIs, better net margins, and so much more that comes with running a business. Are you currently in a default? Are you currently in a place where you feel like you will default? You're behind with your payments, you're balancing checks. There's probably chargebacks you have to be cautious of so you don't continue to endure, and you thought your solution was to take this debt and refinance it underneath something else, or completely consolidate it, get a new loan to pay that off, or pay it completely down as much as you can. So that's another thing. If you've considered filing for bankruptcy, whatever that type of bankruptcy is, because there's also on the personal and business side, like I said earlier, the types of chapter bankruptcies, there's a little bit more detail into that. I'm not getting all that into this video. And you're feeling that financial burden and struggle, that could be a better route to go. If you're dealing with a mountain of personal bills and all these obligations you need to meet just on your personal side, it's not even factoring in your business. But when you factor in the two, you're seeing that you're using your personal debt and your personal credit a lot for running your business. And that's not easy, especially if you're not taking a salary. If you can't pay yourself first, you don't have enough profitability. This will allow you to have that breathing room. So it is very helpful to go in this direction. So I'm going to go ahead and flip screens here. And I'm going to go ahead and show you, and I didn't go through this. I was going off the top of my head here, some of the stuff that would be helpful to have a debt restructuring scenario for. But in this case, let me go ahead and switch screens. I'm going to type it in here so you guys can see that. So to get started with debt restructuring, and there are a lot of people who get started with me because of a lot of loyalty. If you've been following me for some time, you would know this. Excuse me if it got dark. Weather here in Washington, it was just a bit sunny like a couple minutes ago, and then this just happens. It's not like I needed extra lighting for that, and this just happens. And I have my HP lighting screen, so that ends up happening from time to time. But a lot of people will fill out a questionnaire form with me, and it's a lot of the time because I'm more of that introvert. I'm an analytical person. I don't speak a lot. If you're wondering, if you didn't see this, by the way, I just went to the doctors and I had blood drawn just for my annual physical checkup. Everything is good so far. Very grateful and thankful. And I had a quick conversation with the PA, and she had asked me how everything is going in life, and we have a great communication and great relationship. And we got caught up. She was on vacation, had to reschedule a couple of times, finally got in. This was the third one, finally was able to go in. And got to know more about her vacation and what she did with her husband, had fun. And then also their business, their situation, they're in metal fabrication. And her husband knows all of that. He has the knowledge, and we got into a little bit. I didn't get into numbers or none of that, but she explained to me profitability is strong. And she knows my background. She knows that I'm in not only the debt consolidation, debt restructuring, reverse debt consolidation, other forms of refinancing, but in the term loans, bank or non-bank term loans, SBA loans, a lot of different solutions that are available, advances, credit card side. And then I also run my other businesses. And so I told her I'm pretty busy these days. And in case my blood pressure was high, which it did show a little bit, it's one, because I have a thing with going to appointments. And then two, I have been quite busy and flooded, and I have to wear multiple hats sometimes in my business, being the broker, the pre-underwriter, underwriter part of it, creating pieces of content until that time comes. And I'll probably be outsourcing that, which will happen sooner rather than later. And there's parts of that. But yeah, this for a while is what I've been doing, and I've been helping out a lot of people, and the loyalty, that's why. And then also very well balanced, educated myself, and yeah, and there's quite a bit more to my story, but I'll leave it in that. And if you feel like you want to learn more about how you can get more of the strategic advantage in partnership with me that a lot of people already have, and I'm very punctual and disciplined. I'm very good at reading people, and I know when I should give somebody my energy and time to, how serious they are they just beating around the bush. I'm not one to do any of that. And I review a lot of documents every single day, guys. I review bank statements, P&Ls, tax returns, balance sheets year to date, debt schedules, all of this stuff. And I know what's going to happen on the payment analyst side to a lot of this. And I'm current with everything that happens and how much gets consolidated, what's getting restructured, and to what degree. So I'm going to put this on your screen, and I'm going to walk you through it. And there's a little bubble there if you want to get in contact with me. But the best place to begin is here and go through this first. And it'll look like this more or less. It might say 2024. It might have something different here. The page may look a little bit more or less the same. But you have that here. See if you qualify for the #1 business debt restructuring businesses. Love. And this is a program, and I've vetted who is the best in this space to work with. And I've gone through some myself, as well as understanding, okay, what is it exactly that they can do, at what percentage and at what level, and having that relationship. And also something that you have to understand is not only getting your debt restructured or to a point consolidated and then restructured or in other formats, but what can you do after that? And so I'm going to show you a little bit of that in a second, but you can scroll through here. You can watch the video that I created on debt restructuring a little bit. There's a readable PDF format or a document format that may still be there, it may not, but you can look at that and follow along while you watch the video. And if it isn't, it's okay. And what is debt restructuring? Just very quickly, if you're drowning in MCA or MCA-like debt or any other type of business debt, and we can get into personal debt, but this is more on debt restructuring for business debt. Like I said earlier, a little bit portion of that being onto debt consolidation is you have to be careful of what you settle for less and how that does report. And is a bankruptcy the better approach? And I still wouldn't do that. And then for a lot of people, they try to look at things for legality issues, tax purposes, and the difference between what they owe for taxes and a lot of things. So just be aware of that and what tax implications it could have. But more than that, on what impact it'll have to your credit and your credit history as your report moves on and you try to get other solutions like 0% interest business credit cards, because we don't want to see any kind of bankruptcy at all showing on your credit profile. And if it is most recent, if you're missing payments, that's even worse. Late payments are bad. If you're trying to get a term loan, you can't get it because you have missed payments over 60, 90 days, and that hasn't cleared. It's not good. It hasn't been cleared. It hasn't been paid to its full. And so you have to be cautious of getting yourself into a bankruptcy, any kind of foreclosures, and anything that you will have to consolidate in a way where it is harmful and it'll have a bad effect. So there it is. And you can't free any kind of cash flow. And we can interpret cash flow in many ways: operational, financial, investment, cash flow. And I look at a lot of this in businesses and I look at this in my own. And so when I work with business owners, I'm not just somebody who can help them get funding or restructure, consolidate, refinance, find relief in their bills. They're so up here in drowning in debt and they're stuck on one platform and they have to try to change things, or they're stuck over here in their ways and they need to find something where they're going to have a better outlook months down the road. And if it won't happen right away, it'll be able to lower their threshold so they have enough cash flow operating wise and be able to have working capital and use things for payroll, use things for certain expenses. You're paying other lease payments and agreements that you have. There's quite a bit more. You're growing and expanding, you're doubling, you're tripling, you're quadrupling your revenue. You're getting a better ROI margin, net, gross. There's quite a bit. So you can have continuing ongoing projects with that and without having to worry, and are ready for a team of experts who can help you restructure or settle so you can take back control of your business. Debt restructuring is great when you can't consolidate existing debt with a new loan, like you can't take cash advances or any other type, put it underneath a bank term loan, an SBA loan, or any other format. That won't work because you're restricted by your current cash flow obligations and too high interest. And for your specific market and economic factors that go into this, it is hard. And a lot of these lenders, because of that, your cash flow, your industry, and more, are going to want you to completely pay it off. But how do you pay it off? Well, you first focus on restructuring. You focus on restructuring, and then you have enough cash flow. You can use enough operating cash flow. You can use enough of the revenue you generate from your business to pay down your balances on your credit cards. Now you're underneath that 40, underneath 35%, and you have underneath 40% on all of your revolving accounts in the last 12 months. And that's even more if you have a recurring pattern where it's strong enough that can allow you to go for other types of credit solutions. And that'll be very helpful. So it's not enough, or it's strong. It's not enough to cover. You don't want a new loan from a reverse debt consolidation. It is way too expensive to do that format. Now you have another debt obligation you need to meet. And if you don't meet that and you default, you can go into a court order. You can have a lot of tax implications later down the road. And this would be very, very hard. And you're now having to face difficulty with lawyers and attorneys and all this stuff that's going on. You don't want to have to be a part of that. And if you have been there, you know how hard that really is. And I've had to help people through that process. And sometimes it is salvageable. Other times it just really isn't. And you just want to make sure you make your payments and you don't have to go into past default judgments in place. And you don't even take care of that. And so you're having trouble refinancing debt under other services. So you need existing debt lowered by an average of 40 to 75% on your business side by an attorney-led industry expert and experts that will restructure your existing debt into more affordable ones. This is a great solution for many people that I've helped out with the attorney-led debt restructuring teams with decades of experience that will renegotiate your existing creditor notes. That's a great advantage. I'll get into some of the qualifications here in a second and see if that makes most sense to you. So you are eligible if you have at least a minimum of $30,000 in MCA advance type of debt and or MCA like debt. other factored lending products. People put it into a hybrid advance. It's not just based off credit card and debit card statements, but you're dealing with more of a total revenue coming into the business. And or you have $1 million in total debt containing other business debt like business credit cards, bank loans, tax liabilities. Sometimes we can include the business credit card debt, the amount of that, however much it is, in the MCA restructure, but that will negatively impact your credit. If you are in pain, though, if you are at your last wit, you're in this drowning hole, that water is just seeping through it now, and you can't claw your way out of it. You've tried other ways, it won't work, and you don't want to continue to be behind on your payments. You have extra bills coming up. You can't take and renegotiate those contracts, and you're trying to go into another field to generate more revenue, but you can't. You have to take care of what you have right now, and that's what you need to face. You need to face your own personal credit, and what effect does that have if you're renegotiating and you're settling? What are you doing under your business side? So if you are in pain, though, you should not care about that. And that's how I best see it. If this is going to help you keep your business, keep it moving, keep things going up, that's the best thing to do. No minimum FICO score is needed. No collateral is needed. No requirement on that. No 85%, 95%, 75% collateral coverage or any formidable equity that you can provide. No upfront out-of-pocket fees, so you don't have to be charged. None of that. Don't worry about that at all. No negative impact to your personal or business credit scores in many scenarios. So you wouldn't have to worry in many cases, those DNB scores or those other credit bureaus that we're going for, and the Small Business Financial Exchange, PayNet, or anything else like that. We're looking at the LexisNexis. No negative impact to your personal or business credit, and that's in many scenarios, in many cases. There is no new loan. So you're not going to be given a consolidation where you're given a new loan to pay off what you currently have, and then you have one big loan, or you have one loan with one payment, whether that's monthly, weekly, biweekly, daily, or however that best looks, and what the service is. You're not given another loan. And in many cases, that's best to do. You have to focus on what you currently have to lower to then be able to get yourself into the position to take on more debt. Don't take on more debt if that debt's going to be bad. If that debt, all you're doing is to pay off trucks and repairing them, and you're going to return a truck to get the equity to do a sale leaseback situation, refinance, you're putting this money into a reverse effect where all of it's being used in terms of working capital needs. Where are you taking this money and putting $1 in, getting $2 or $3 out of your marketing campaign, and going from about $10,000 you put in, the cost of funds, anything that's variable, anything that couldn't be fixed? Where do you go and take that and make more money with it? You have to ask yourself that question. And what is your return on that investment? And there's more in terms of numbers. No new loan, again, quick and an easy application process. I'll guide you through all of this. I won't go through all the little steps right now, but I'll share with you the information that I would need, especially if it's MCA-like debt. I would need those contracts to make sure it is sufficient. You have labeled the debt that you're going to restructure, what you will take care of, what you can and can't. And there will be a little bit of a step-by-step process. I can cover this and I'll share it with you in an email a lot of the times, the step-by-step, the documentation that I would need, what you would need to supply, what you would need to fill out. Customized offer, a term sheet, closing call within 24 hours most of the time. And again, guys, I work with the best in this, so I know what's going on every single step of the way. I'll know what's happening here, what's customized, what can be changed, why it was changed this way, in different loan scenarios if you're trying to evolve and trying to pay down now another payment or restructure, or you're trying to look for other formats of additional funds. So that's in place there, and that's normally what happens. So aside from MCAs, here's the other debt that we can reconstruct. I got to move that word, excuse me. I always use the word reconstructure. It's restructure, but I guess it's more reconstructure. I don't know. It's easier for me to say reconstruct, like easier to put the CONS part than it is to do the restructure for some reason. But determined on a case-by-case basis. These are for government type of loans, and on a case-by-case basis on what can be. We know that a lot of the times you can't refinance your EIDL loan. So for a lot of you in here who are watching that have EIDL loans, getting that refinanced underneath an SBA 7A, a 504 wouldn't work. There would be situations where you have commercial real estate for a 504 loan. You're trying to refinance existing debt and then get a new loan, a commercial loan with 551% owner occupied, but owner occupied. And so that wouldn't be a good scenario if you didn't have those, and it'd still be hard to go underneath those type of SBA loans. And I've done those a lot. I still do those till this day. I've helped out quite a few people recently getting in the millions with the SBA 7A. There's 504 ones too. But people getting into those SBA loans. And then also there's a bolt loan up to 150,000 only for working capital uses. It's a great one. And if you'd like to learn more about it, I'm going to have a questionnaire form for you down below in the description to get started with. But back onto this. Vendor debt, supplier debt, I know that can run off the roof, especially if you haven't renegotiated. You're not in position to renegotiate or restructure your contracts, and you're in position to find new suppliers, new vendors, and how you're getting paid, how you're paying others. And you're also factoring in what it comes about wires. Think about your banking relationship, and not just restructuring, but also what you wire, what you don't, and having wire fees and having ACH payments, payable and paid to you, and a lot of these other things. And if it's causing a lot of trouble, a lot of people, what they end up doing is thinking that moving to another bank without any fees or something else of just a quick solution, you have to be cautious of doing that, especially when you go get new loans and advances and things like that. We look at bank statements. I analyze these bank statements. I want to see how cash flow is moving. I look at how revenue moves, deposits move, and I calculate and I do my own numbers to see what the potential amount of an approval could be and through the process thereafter. So you have here supplier debt, as I mentioned, with vendor debt, government loans, commercial real estate debt. There's been some presentable solutions to me lately. But the thing is, when there's commercial real estate involved, you have to understand that to what length or to what amount is there. And if you're not falling behind on payments, there's really no like financial hardship, let's say, but it's something that's added to something else that's a financial hardship. It may be looked at, but it's still going to be hard. Secured or unsecured debt, and it has to be over normally $1 million, if not just that, but in total. So it makes it a lot more difficult to just say yes to. And like I said, again, secured debt, even unsecured debt in the $1 million and above would work in a combination of, but usually you'd have to be in a whole lot of trouble and a whole lot of hurting at that point. And you're behind on your bills, you're behind on your mortgage payments, and there's just so much more complication. It's not just always simple and dry to say that commercial real estate would be 100% restructured immediately unless it were combined with like MCA like debt. Sometimes that would be more helpful, but in certain circumstances we're going to look at this. The term loans, lines of credits, those are very standard. I don't want to get into all of the examples on that, but we're going to speed through this. All forms of tax debt, tax liabilities, etc. Debt from business ventures, business credit cards, bank debt, credit union business debt, a huge one there. A lot of people are turning to their credit unions. Not a lot are being over leveraged. There's a lot of favorable circumstances for people who have credit unions, but still I see that come in a lot. Non-bank business debt, equipment type of loans, any unsecured business debt, as well as secured business debt, as I mentioned earlier. And so the key benefits of this, you have an experienced staff. It's going to be hassle-free at your fingertips with a team of experts who know what they're doing, with myself in that process, understanding what's going on here and there, understanding with the payment analyst, what's going on, what's being restructured, to what format, and all of the stuff of collecting documentation, packaging it, and pre-underwriting, underwriting to an extent they're understanding the debt, understanding what position you're on, the total amount per year, what existing cash flow do you have, what's your ratio, what in terms of savings to your cash flow. And that's a lot of the times why people get declined for an SBA loan, because you don't have enough in savings, you don't have enough cash flow, there's not enough of a ratio there. Fast response time and time to approve. This is a 24-hour approval for most cases. Customized offer, as mentioned, term sheet closing call within 24 hours most of the time is what you'll see. There have been a lot of situations recently with debt over 300,000, over 400,000, over $1 million. Certified, even less than that. If you have less than that debt, that's fine. Certified expertise, and it comes down to more so the MCA like that is what I should mention there. Certified expertise, attorney-led experts and team at your fingertips who have helped thousands upon thousands of people, a lot more. Character-driven. In myself, and I speak a lot of this besides not just the team that I'm with, but also the part in my own business as well as myself, I'm very character driven. I care about you as the person. I care about how you improve your health and relationships as a result of this, or if there was no result or not a lot of it, what ends up happening. So I care about you, and not a lot of others would really think about that, but I do. And I care about you as the character, you as in your health and your relationships, and how that allows you to grow even more within your wealth. So character driven, we care more about than just your business. It's more about who you are as a person and making sure you are at your optimum best and you're doing what you can in your own life, not just in your business. Great reduction percentages, 40 to 75% on average, debt restructured, and great structure for you to handle your debts more easily. How it works in 6 and fast, simple steps. You work directly with myself and the team to step 1, enter your information. There will be an in-depth analysis for you in your debt restructuring application, business debt schedule, income projection form. And I'll be sending in a few more things, which I'll communicate with you usually via email. And I'll share with you those 3 points. And if anything gets added, I'll see. And then how I would ask for that to be submitted so that I can review it with the team as well. We will review your submission, and it doesn't take that much time to get back to you. Moving forward from there, there could be a scheduled one-on-one call, usually what happens with the principal, and I'll let you know this. I can schedule it on your behalf. You just let me know when you are available to go over this with the principal. And then thereafter becomes the payment analyst section. It's a walkthrough to having a customized format to ensuring that you get the right payment structure and that this makes most sense and what the payments are going to look like on a weekly or so, and how much for how much time. Is it 40 weeks, 35 weeks, etc. Step 5, it's an e-sign. It's very straightforward, safe and secure. You go through that process. Step 6, normally you're done. And if there's anything that's changed in between the process, you'll be made aware of. And I'll let you know, and I'll communicate with you a lot of this on the back end. So there's that. You can get started. And then about us, you can learn a little bit more there, how I've helped out a lot of people get their debt restructured, even consolidation, refinances. But I'm seeing a lot of debt restructures now. And then to get into that stage later on to get if it makes sense to do a consolidation and a new loan at the top tier service, what would be that format? Or if you're just trying to refinance a current MCA and trying to get a new MCA, paid off 50% of it already, or if not more of it, and you're trying to replace that with another one, get double the amount, better terms, better rates, etc. That's another situation, as long as it makes sense for your cash flow. And if it doesn't make that sense entirely, can you grow your revenue enough to a point where it's going to stabilize? You can pay the debt as fast as you can, and then not have that short-term payment to make. So you just have to understand the business structure better. If you don't, and if you do, it's just a business management. It's the type of business you're in. What are you generating? How much are you producing? How's your production? Is it efficient enough? There's a lot more. So there it is. You can start to see a little bit more in terms of loans, in terms of other scenarios, in terms of funding. We funded all types of companies and continue to share our best tips and secrets to getting funding so you can build, grow, expand, and even get out of a tight pinch. When the banks say no, we say yes. And even when the banks can say yes, is it best to go for it? And if it is best, what solution is that? It's your money. Go ahead and clear your debt before it's too late. The debt restructure program we have, it's very popular right now. It's very intensive in terms of a lot of people jumping on. But the requirements, they could change at any moment. Just think about the ongoing debt you have right now and what could change. Your APR, you're looking at taking out a line of credit, and your rates just the fees, the interest on top of what you just took out changes. So, and you're adding a lot more debt. It's revolving. You can't pay it down fast enough. You need the money to pay that down. There's a lot of other things. And so look at what's happened with the SBA EIDL loan, PPP funding. It could be hard to get, just like those, and they've gone. They've come and they've gone. They could come back. We don't know what timeline there is on that, but I wouldn't wait on it. And you'll lose your chance to put the cash flow you have to work for your business and for many more reasons. Do you really want to be that person sitting on your couch, living in regret, thinking to yourself, what if? Or would you rather be the person who said, I did it. I am this person. I am, as an affirmation and an assumption that's going to carry you way beyond just your business, but you as a person, and saying that I'm the person who took care of my debt, and I did it accordingly, and I did it in the right time, or it's exceeded it, but now I got away from it because I was able to find the right solution. You can learn a little bit more about myself. I started like every person did, as a 9-to-5 employee. I was in a financial logistics position, like many people. I'll come back to my story, but here it is. I went through a lot of troubles trying to find and navigate how to clear up my debt. Should I negotiate it in this way? Should I settle my personal debt, let alone my business debt, consolidating personal debt, being cautious of that, as I said earlier, in the direction you go into and you stumble across. So here's more information. But here, if we click this button or any of the other ones, let me click this one. It'll bring you to a page that looks something like this, or it could look different over time, but it'll ask you to fill in some simple details. It could look that short. There might be one that's a little bit longer, and just going through it because I have a different format for specific people. And then you can see that here. You can learn a little bit more. There might be a video down there and more information. But this page could look a little bit differently. Let me bring it up on a different screen. It won't exactly show up right there. So I'm opening up a new tab. Give me 1 second. But all of this information to get started with will be down below in the description for you to check out. And right now, excuse me, what you can't see is I'm in my back office with my hosting provider, and I'm in my WP or WordPress back office. So I'm going through all my pages now, and I'm going to sort by date. And then this is the page that I wanted to bring up because I was testing it a little bit. So let me go to my test details. And then I'll open it up here, and then I'm going to transfer it over to this tab. So this is what it could look like if it's the longer format, and I'll give you a reason to why it is this way. So get your debt restructured or settled fast. Please complete the questionnaire form below to get a personalized and customized email response for your best debt restructuring and settling option, as well as even a bonus on your best funding option and options thereafter from a real business loan broker and funding expert, as well as underwriter. Plus, get a free 6-step pre-approval lending checklist to get you approved for funding faster and the right service or services without making those mistakes day over days, weeks over weeks, months over months. And that passes yearly. And now you're in the situation again where you're sitting on your couch, flipping through the television just to entertain yourself. You really know you don't want that feeling, but you've gone so deep into these habits and routines where that's the only thing you can't feel. And you don't want to be a part of that. That's not a good place to be in. And so over here, it'll have things like your name, best email address, phone number, time in business, and a little bit that the other form had more or less, up to the point here where it's going to ask you for your business name. And there could be a little bit of an additional fields that you'd want to submit, but you see how much MCA debt or MCA-like debt or any other business debt do you have. You can list that along with phone number, time in business, best email, name. And then down here, you have how fast you need to get started. I may have an additional amount of questions as this changes. And then part 2, this may look different in time. I may have it above or somewhere else or the same. But part 2, future funding amount needed. And this is where now you can start filling out the details to, if you needed future funding, you can fill out the rest of this form. And this will look different. This will look more or less the same if you already filled this out. So you go down through here, it will be asking you questions. It's very safe and secure. A lot of people have filled this out. And you'll see all that to be asked for. And it can literally be done in less than a minute, less than 2 minutes, more or less. It's not a lot of your energy and time you're putting into this to account for how much potential funding you could get and how you can use this funding. It goes a long ways, and it'll be very helpful for you to navigate this with an expert and yours truly. So I won't go through all the little form details on that, but there it is. And be as accurate. I can pre-screen, I can pre-underwrite very, very well, even without looking at documents. Once I have the documents and I package it together for you on what I'll need, I know what to do very, very well from there and how to mathematically calculate and look at a lot of things. And so here's more of it. You can go through. If you submit this, it might bring you to my thank you page where then it shows you a video, or it shows you, hey, I'm taking care of you. Your email is on the way, or this is going to happen. So that's what to look out for. So I think I'm going to go ahead and close up here, and I'm going to recap though very carefully. I'm looking at my doc on my other tab that I have open to make sure I didn't miss anything, or if there was something that I wanted to cover. Give me 1 second. But most of the time, what you should know is over 90% of applicants are normally accepted into the program, and you have an attorney-led team that's going to be behind your back. I'm going to be there to help you along the way to understand how to do this correctly for you and your situation. And just some of the requirements that I went through earlier, how much you can drop, and how there's a lot of lookalikes out there you have to be cautious of, and how what percentage, but also the expertise. It's like the same thing when people try to go through the ERC credit program. They don't realize that they're not getting always the right people to look after their file. And so if you don't get the right type, that's going to cause a lot of problems. And I've seen a lot of people fail in getting the amount that they needed to get restructured, and they come back and try to do it underneath somebody else, whether they could or couldn't help them. A lot of the times they wouldn't be able to because they have contracts in place and who they're trying to pay down or pay off. So you just have to be cautious of that. So I think that's where I do want to end this video. I hope that was helpful for you. Yeah, there are little bits more in details that I can share with you, especially behind the scenes, and go through things and what would be then needed to be supplied. But hopefully this information was helpful. We brought it to the very beginning on the types of bankruptcies. I know I got into it and I got into some more or less, but not too deep into it. And the type of bankruptcies that are out there. Didn't go too deep into that, but be cautious of trying to file for a bankruptcy. That's the last resort. And then sometimes it can be better than consolidating credit card debt. And because of what it shows on your credit report and how long it'll last, and when you're trying to go get a loan. But that's the last thing you want to do. And doing things that are out of your jurisdiction, trying to protect your assets, trying to do things internationally. A lot of people, you wouldn't imagine how many times I hear different situations, and I know how to combat them. I know how to disregard. I know how to say that's most appropriate. And the way you stated it and the type of amount that you have, I would recommend doing it this way because of market conditions, because of other economic factors, because of economies of scale, because of current inventory that you have. You need to liquidate. You can't liquidate it fast enough. You don't want to have to use collateral. You don't want to have to go about it in a way where you got to offer your AR, your account, your aging account receivables, or in other formats. And those could be a last resort. Those could be other ones that can have additional ways for you to use to fund your business. But we have to look at what's in your best interest. And then moving into debt restructuring, just kind of more or less breaking down what that is, as well as going through the page. So all this information I will try to leave for you down below in the description. Hopefully you got a lot of great information and value from this. There's a lot more also as well. And by filling out that questionnaire, that'll be in your best interest. And if you have, and I've gone back to you, that's one thing. And if I haven't, I will get back to you soon. I do get quite flooded and busy, but that's okay when you're working with an expert. Isn't that not what you want? And when I tell people the best way to get in front of me is land in my email inbox. I'm in my inbox like every single day. I have a schedule every single day that I go by, reading documents in the mornings to then transitioning to this, going through a few responses on emails. And if your email just happens to drop in there and it's scheduled on my time, and I got to get to these people first, and then I also have to get to you in time, but were you responsive? How you can show that is by being responsive, allowing for feedback, be patient, be open-minded. Those are the things that I look for in business owners, and having the right morals, the right values, the right standards, and stepping up when you have to. You're not unaccountable. Don't be irresponsible. Those are things that lead to you and your own demise. And I know it's not something, I'm not an aggressive person by any means, but I just want you to know that and hear it. And I don't like bringing it up, but too many people try to take advantage of things, the system, trying to look for shortcuts, when in fact, this isn't a shortcut and this is their way to go. And it could be shortcut in a way, in a sense, to help you relieve your debt, but also get into other loan programs. And not a lot of people would understand that unless they were given that help and that guidance by somebody who understands how to do this correctly. So all information down below in the description to get started with this, and more options as well for funding and other services. And if you got value out of this, please give it a thumbs up, share it with others who you feel will find value from it. It can be a complete stranger, a friend, or a family member. And if you haven't subscribed, please go ahead and do so, and click that bell notification icon so you do not I was going to say, so you do not get any further videos. See, my introverted nature there. And I'm not good on video. So you do not miss any future content that I will be coming out with, not only on restructuring, but also any other forms of consolidation. You also have bank term loans, online bank term loans, other options besides your own banking relationship or relationships, community credit unions, lower tier banks, credit-backed funding, creative credit-backed, doing 0% interest, credit card financing. You also have personal terms / installment loans, personal lines of credit, HELOCs, other forms. You have 401k IRA, cash flow, revenue-backed funding underneath lower tiers of not SBA or bank term loans or other formats. It's not equity, it's not liquidity formed. It's more of a, we're looking at month-to-month bank statements. And keep in mind this, that I help people also improve their cash flow, their EBITDA, their profitability, other formats. And being a business owner myself, understanding how to become more marketable ethically, of course. I think every business owner should have that in their arsenal to a degree, or at least outsource it, but learn the operations of the business, at least give it a try. And it would be most appropriate for you to have that guidance. I could be there along the way to help you too. And I've grown a lot of businesses into the millions. I've also helped people when I was working in a 9 to 5 role, the company that went down under, and I was underpaid, undervalued, literally. The company went down under for a huge contracting company, financial logistics servicing HP&P South. And I was also having to lift media boxes for the time being to service that part of the department. And it didn't pick up so quickly, which was good. That's a big reason why I took the position too, because there was part of that, but I knew it was slow and it would pick up sometimes. And so it went down under. I had to go back on unemployment benefits, food stamp cards. I couldn't even go out and feel like having a meal and all those things. And so I'm just very grateful and thankful what has come about from that situation, because you learn a lot from your, I don't want to call it that wasn't a mistake or a failure. That was more of a lesson learned, or that was more of a, this happened, it was out of your control, or other situations where you learn from your own mistakes. And I went to school and I educated myself. And so going through that stuff and going through this world, studying a bit of different subjects from sociology to chemical engineering to then business, and then going down that direction, learned quite a few. So that's everything from me. Down below in the description will be that information to get started. Appreciate you. Have a great rest of your evening. This was a spontaneous live. I didn't broadcast it or announce it before that this would be happening. Otherwise, people would have probably in here commenting over and over. So this is the way I'm going to leave it. Appreciate you. Thank you for tuning in, and tune into the next one. Take care.